Good day traders, Chris Weston here, Head of Research at Pepperstone. And today I really want to focus on what's happening in the Australian dollar. One, specifically because I believe we're at a very interesting juncture where we need new news to feed the beast effectively and drive price up or down. Secondly, because I think we've seen a rather big pickup in client interest to trade the Australian dollar, not just against the greenback where we see the concentration of flows, but also against the pound ahead of the key Brexit deadlines that we're facing, and also against the New Zealand dollar where we're seeing clearer signs of policy divergence, where the RBNZ were less dovish than what the market was looking for. It's starting to trend lower, the pair, and people are suggesting that perhaps we're seeing this more dovish twist from the RBA, which of course we've seen Philip Lowe move to a completely neutral stance. The RBA recently in their statement of monetary policy obviously cutting their GDP forecast by quite a punchy amount, and also their inflation forecast as well, whereas the RBNZ continue to take this sort of more neutral stance. You're seeing policy divergence, and that's making the currency trend. So we're seeing a big pickup in activity there as well. But of course, we need to understand that the Australian dollar continues to be a very strong vehicle for traders to trade what's happening between the Sino-US relationship there in the trade talks, which of course is dominating the macro scene at the moment. It's really very, very important to see how that plays out. So if we do see a situation over the next week or two where it doesn't look like they're actually converging as much as what market have been pricing, perhaps the Australian dollar goes down through 71 cents. If people do believe that we are going to see a trade tool, so potentially an extension playing through, then perhaps we can see some further upside into the top end of the range in the Australian dollar against the greenback, which has been trading in a 72.5 to say 70.5 cent range for some time. And that's going to be the vehicle which we believe everyone will be trading most prominently there as well. So what is going to happen with offshore factors, and how does the Australian dollar trade as a result of what's happening in the US-Sino relationships, which of course, as I say, is dominating the scene. But back home domestically, if we look at interest rate pricing at the moment, we've got about a 76% chance of a rate cut playing over the next 12 months. Now that's come back a little bit. A couple of weeks ago, a week ago, we had seen the market pricing over just one rate cut, and that's come back a little bit. Maybe that's for a reflection of this better feel towards Chinese equity markets. Maybe it's a reflection that the NAB business conditions have had a bit of a pickup. And of course, we've seen the national auction clearance rate running at 54%, which is the highest level since Q4 of last year. So certainly there has been an improvement in auctions, although it's only really been one so far. But as we're going through this week, we're still very much fixated on the idea of this connection, this feedback loop between falling asset prices, this continued fall in asset prices, and what's happening in business and consumer confidence as well. I think as we go through this week, the Westpac leading index will be something that we'll be focused on. That has been deteriorating of late. That could be quite an influencer on market pricing. We'll also have a look at the wage price data midweek, and that's something that will be something that the RBA will be looking at very closely. The market's looking for an annual rate of 2.3%, which will be unchanged. And of course, then we've got on Thursday, we've got the employment numbers where the market's looking for 15,000 jobs on a net basis, and they're looking for the unemployment rate to be at 5%. But of course, we know that unemployment and employment itself is a lagging indicator, and we're looking for sort of the more forward-looking indicators such as credit. And then we've got Philip Lowe speaking on Friday as well. So we've got these two factors playing into the Australian dollar. One is what happens with offshore factors and this vehicle of how we're going to trade the US-Sino relationship, and secondly, what happens on the local data front. If you want to stay in touch and get my thoughts on a regular basis, see the synopsis and see the links that we have for my daily fix within the description below.